What's going on, traders? This is Jack with the Trading Tribe. Welcome back to the channel. Today we are going to have more of an advanced video going through how to project out your profits and losses with more complicated positions. As you become kind of more of a pro on the trading side of things, you will begin to take kind of multi-legged trades where you're maybe taking shares of the stock and options. And the ThinkorSwim platform, which is the platform I trade on that we'll look at today, has a really nice analyze feature that allows you to kind of look at the profit potential of all things considered, as well as the losses, all things considered. And I wanted to break down on the channel how to do that within the platform with a real example that I have put on within the Apple stock. And I actually took this trade today, so it'll be a good trade to kind of go through as well. We can see here on the left, I have my 4-hour time frame of Apple. So we can see Apple's been on a really nice uptrend, and starting off in 2025, right, we've had a really nice pullback on Apple, and I'm essentially buying it here, ideally targeting right for Apple to go back to all-time highs, which is a very similar trade to where it pulled back to this 100-day moving average, which is this white line, and it did the same thing right back in October of 2024, which we were able to ride that back to all-time highs as well. In this case, I have my positions actually shown on the chart. So this middle order of plus 100 is 100 shares of Apple, which I ended up purchasing today. I can open up my ladder and we can see we're down, a couple dollars in this case, but we're pretty much break even. I have an average price of around 237. But then I also sold a credit spread, and feel free to look back on my channel. I have a video describing how to swing trade stocks and how to sell credit spreads. Those will be good videos to watch before digging in too much to this video, but this negative 5p and this plus 5p is what's called a credit spread. And this is a really nice secondary trade where I can basically take a trade betting against the people that are betting on Apple to drop. So in this case, right, there are people betting on Apple to drop. Think of it as I'm basically taking the other side. I'm selling them that bet. And if Apple does not drop, if Apple ends anywhere above 240, I end up collecting that premium that they paid to take the bet. So it's kind of a double way to take advantage of Apple. If Apple ends above 240, I essentially collect $1,000. If Apple goes all the way to target, right, my shares will go up and I'll collect that $1,000 of premium from the credit spread. If we were to want to see this kind of in a diagram, what you can do in ThinkorSwim is you can come up to the Analyze tab. And this tab looks busy, but it's actually fairly simple. So this basically allows you to pick a ticker. So up at the top left, you can see we have Apple selected still. And you can see it basically picks up your positions that you have on the stock. So if I was to uncheck these two with options, I can basically just see my shares that I've purchased. So I have 100 shares long, which is betting on Apple essentially to go up at an average price of 237, like we saw a little earlier. And this is really just my P&L curve for my stock. So if Apple ends up going down from my purchase price, obviously I will lose money. If Apple goes up to 260, which is our target, I will end up making money. And so on the stock side of things, right, I'm risking $1,000 here for $2,000, but this is the P&L curve of the stock. For the options, I can uncheck the stock and I can just double click on both of these options rows. This shows the P&L curve of my credit spread. So of those two options that I ended up selling, we can see here I sold the credit spread, and there's basically about $1,000 of potential profit as well as potential loss. Little bit more than that, but we can see if the credit spread expires below about 235, I will incur a loss. So we can see here it's about a $1,200 loss. If the expiration date ends and the stock ends up below, right, 235 in this case, I will lose that full amount. but then I will make that full amount if the stock ends above 240. So we can see here, based on the date we put in up here, we can see the profit potential essentially of the spread by itself. But what's cool about this is we can also see our break even. So if Apple was to kind of just hover and end at 238, we can see here that ends up being a P&L of 0. So really, really nice way to kind of visualize it. And on the option side, this can be a little bit tricky. It's also really nice. I can check every box here and see my P&L for the entire trade. And so with all things considered, with my stock components, with my option components, if Apple was to go to 260, for example, on this date, I would make $3,000 in this case, right? 3,200, which is the profit from the stock side and the profit from the options credit spread combined. And then you can see the opposite, right? On the downside, right? If Apple is to fall, how much would I lose on both sides of the trade? So this is a really nice way to kind of visualize it, especially as you get more advanced. You're going to want to start looking at kind of your full risk with these different components of the trade. So hopefully this really helps. Feel free to leave a comment down below if you have any questions. Hopefully this really helps with the real example. Also like and subscribe to the channel for a lot more content like this. Thanks everyone. We'll be back next time.